Hello, everyone. Welcome back to How to Trade. I'm Shane Vernier, and this is Scalping Retail Sales. Good to see you, Mark Corp. Welcome, everybody out there in YouTube land and on X. We got a lot. I say it every single day, but we really are jammed up today. We got a lot going on. Typically, I would say kick back and rest on your laurels. Meaning, if you made a bunch of money this week, maybe you don't have to trade today. And that's always the case. No Donation Friday is a real thing. I preach that almost every single Friday. But today, we've got some action. We've got U.S. equities coming off in a big, big way. And we've also got the U.S. dollar sort of stagnating right around that 106.84 level. But we're at huge, huge highs. So we've got to address why the U.S. dollar is as high as it is. A big story broke yesterday. We touched on it during the live stream yesterday, but it really went big during the afternoon here in the United States. And then also, we've got to talk a little bit about some scalping approaches. We're going to go over that 9 EMA with RSI confirmation. Right now, I'm watching the NQ on the 5-minute chart very closely. And also, we've got a key level for gold. We're going to try to trade a little bit of gold today. I think we've got a pretty good in there. And then also Bitcoin. Our key entry there that I illustrated earlier this week's been an absolute banger all week long. And it's a great scalping location if, in fact, you're playing cryptocurrencies on the cash market. So I want to welcome everybody back. I think that we're in an interesting spot here going into the weekend. Really a lot of stuff. I'm interested. I'm really interested. Let's get right out to the price action and the charts. This is what I'm watching right here. This is the NASDAQ, Emini NASDAQ 100 futures 5-minute chart. And what we've got right here is we've got a situation where our RSI, we're in oversold territory, so we're looking to get a buy signal. Now with just the 9 EMA, strategy, remember, you're looking for a bar close, a positive bar close above the 9 EMA with RSI confirmation, and then we're looking to go long. Now, is that a challenge to trade? Of course it is. It means that we have to wait. That's why when we say scalping, we're going to do some things with basic order flow too on this live stream so we can actually execute a few trades. But what I'm watching right here is if, in fact, the U.S. equities markets are going to bottom out today, maybe in the next 30 minutes we can get a buy signal here going into that third 30-minute stanza of the U.S. session. We call that C period here in the States. So you've got the first 30 minutes A, B, C. Right now, we're sort of in the middle. We're just starting out B period. I love C period. C period's a great period to be trading, and that's the half hour after the first hour of trade. Gives us an opportunity to see what's going on in the markets and then a chance to react and trade it. So I'm excited here. I think U.S. equities are going to give us some money today. As far as the Forex goes, the United States dollar is right up around 107. The DXY is at 107. There's a couple of reasons for that. We're going to hit those in just a second. But take a good look at this. This is a 5-minute Euro USD chart. Now, I'm not a fan of the 5-minute chart on Forex unless you're trading at a hyperactive period. Typically, that's going to be the London-New York overlap, typically right around the New York Open. So if you wanted to trade a 5-minute chart right now on your favorite Forex pair, I don't hate it. Now, this is a good look at our triple moving average strategy. We actually got some great feedback on this video that we put out on YouTube. Make sure that you're checking out YouTube. We put another one out today, which is rally-based rally. I think a lot of you are really going to like that video, but be sure to check that out on the How to Trade YouTube channel. Something like this right here. Nice big sell-off. Remember our rules for our triple moving average strategy. What are they? The fast one, this is the 5, 8, and the 13. The fast one crosses over the middle one. Okay, in this case, it's going to be the 8. So what do we got? We've got red, blue, and white. So what exactly are we looking for here? What's the one thing we got to have? Crossover, anybody can see that. What's the one thing? Price has to be beneath all 3 moving averages. So right there was our crossover. As you can see, we can sort of blow it up a little bit for you. Right there was our crossover, or cross under, I guess. Bang, we crossed over. Now we're looking to go short, but we don't just go short when it crosses. Price has to be beneath all 3 moving averages. So what do? We sold down here. Now initially, didn't look too good, did it? Got in on a pretty darn good move. So on that trade right there, your sell was 105.60, and now you're down at 105.33. That's a pretty darn good trade for about 27 pips. Now right now, what are we waiting for? Cross back over. So if you're trading this, you could either have already taken some money off, you could still be waiting for a huge payoff, or you could be waiting for this crossover to develop again. So if in fact you do see this red one cross the blue one, remember, price has to be above all 3 of them, and then we buy. So if let's say we get a big gap up here, then you're going to look to buy the market. Hopefully that's one that we can execute during this live stream and really show you exactly how we do it. So those are 2 that I'm watching relatively closely. Right here, oversold, we're looking to bid, and then once again, we're looking to bid. Essentially, what are both of those plays? their plays against the U.S. dollar, which is kind of on a tear right now. So why is the U.S. dollar up big? There it is. We covered this yesterday. We remember about 1 o'clock my time, 3 p.m. Eastern. Jay Powell was speaking at some conference to some people about something, and he actually did deliver prepared comments. Bobby Bob, good to see you. He delivered prepared comments. Now, anytime somebody comes out and they read off a list or read something on a script, say, a lot of the videos, we try to script portions of them because we want to be very, very clear. And what Jay Powell said off of his script and his prepared comments yesterday to the crowd down in Texas was exactly what I've been saying for the last week. As soon as we watched that FOMC live together, and as soon as he started him on around about rate cuts, I went, boom, the election just turned off your rate cuts. That's exactly what happened. Take a look at what comes out of Powell's mouth now. Powell says the Fed doesn't need to be in a hurry to reduce interest rates. That's a far cry for what we've been hearing, I don't know, for about the past 6 months. Remember, economy's in a good place. Unemployment, we don't want to see unemployment go up. We don't want to see the employment market soften. All that stuff's out the window. Now we're talking about, well, what about inflation? What about disinflation? I think that the Fed's in big, big trouble right now, and I really do see some trying times coming for U.S. stocks. You're seeing that downward pressure today. It's starting to sink in. What's going to happen here is starting to sink in, and you're going to see a complete shift in your market dynamic. You're going to start talking about tariffs and trade wars. That's all we're going to hear about in the media after Trump's sworn in. Tariffs and trade wars. And then you're going to be monitoring inflation with a much different light. You're going to be thinking about inflation going up still. Oh crap, we're not disinflating. Jay Powell doesn't know what's going on. He doesn't. Take a look at it. Reserve said Thursday that strong U.S. economic growth will allow policymakers to take their time in deciding how far and how fast to lower interest rates. Strong economic growth, huh? We missed bad on GDP. Remember, GDP was revised down. Remember that for Q3? Revised that down. And then our jobs numbers, NFP was dreadful. It's a leap of faith right now. The economy is not sending any signals that we need to be in a hurry to lower interest rates. So what does that mean? It means that they're going to stay higher for longer. Senator Meeks, the strength that we are currently seeing in the economy gives us the ability to approach our decisions carefully. I got to tell you guys, this is a complete 180 from what we saw in September, and it's having a dramatic impact on your markets right now. We're seeing sort of blood. I call it blood. Right now the screen's bleeding. Look at your VIX right here. Your VIX is up 2%. I'm on this thing like a hawk right here. We want to see this. Remember, we get this crossover on this Euro USD. We're going to look to pull the trigger, but you're going to have to get a bar close up above all three of these moving averages. I like the triple moving average. I think that you could trade it better. Like if you were going to trade it, there's your crossover. I don't really see any reason to sell down here like the strategy says to do. I think you could just wait for a retracement almost 9 times out of 10 and sell it. But that's just my own personal opinion there. What I would say is gold. Gold's been absolutely on fire to the downside since the election. Let's see if we can find election day. Right there would be the 6th of November. So right there is what? Gold's very, very tight, very, very tight because nobody wants to do anything. We don't know what's going to happen with the election. Then you finally get the decision, and it wasn't just about Trump winning. It was about the decisive fashion that all three facets, both houses of Congress and the executive, all went one way. That's why you saw the big sell-off in gold, a lot of that political uncertainty, the idea of a contested election, all that stuff just sort of went away. Now what do we have? Well, you've got a downtrend. And I know I've been really preaching about that 24. I'm going to show you my key level once again. I've done it every day this week. We were almost there yesterday. 25.36 is your swing low on spot gold. This right here is good stuff. Pullback sell. Do I want to be short or long gold? I want to be long. If I'm position long, if I'm investing, I'm a position long, no question, still. Because anything can happen. We could see anything happen. I mean, believe it or not, Trump still goes in front of the court. He's still going to go in front of a judge in New York, and this guy could actually sentence him to jail. Now, I don't think that's going to happen, but I've heard it floated out there a lot. If, in fact, you put the president-elect in jail, what does that mean to our political system? It means it goes into complete chaos, and something like gold is going to really spike. So for me, I'm still holding long golds if I'm invested. I think if you bought your gold bars, I wouldn't feel too bad about where price is. But here's what I would say. If you're a day trader or a short-term trader and you want to do a little scalping, 2603, you step up to the plate right there and sell right in that vicinity. I would, 2600, you could probably sell it. I really don't have a problem with shading it that much. It's just turns into a short-term position, not necessarily a scalp. So if you wanted that trade, I don't blame you. That's a good trade right there. Pull back, short, bang, then you're all over it. I like that. I like that as a shorting opportunity. As far as what can we do right this minute, if I was going to be looking for any key level, it would probably be a 30-minute chart here on gold intraday, and you can see this is an absolute mess. An absolute mess since we saw our retail sales number right there. Retail sales, bang, what are we doing? There's your intraday high. If you're a smart money concept trader, if you're a true or a sort of a naked price action supply and demand trader, what could you do right there? Well, we're trying to break out above that top side high, that overnight high that developed at about 8 a.m. Eastern. Do we believe we're going up or down? Really difficult for me. I mean, I could make the case to short from right there and just stop myself out, but it really is a low probability trade. Here's a 5-minute chart. What do we have here? Not too much. Bullish. Got bullish, 2 bullish candles in a row. Do we think we're going to trickle higher? Really depends on what happens to sentiment on Wall Street. Right now, the Dow's tanking, and the VIX, all of a sudden, the VIX is up 3%. What would I do on something like that if I was working cross correlations with gold? You'd be looking at something like a buy. You probably would want to get on a bit of a retracement, but do we want to buy the highs right here? Could we? I can make a case to buy them. Let's go ahead and send them long and see what happens. You'll notice right here, you're doing business right at that overnight high, and that's typically where that resistance has been. If you, in fact, are buying from here, you're betting that stocks are going to keep crashing, the VIX is going to keep going up, and that this gold market's going to extend. Now look at what you've got. You bought up here at 75, 25, 75. Now you're down around 74. This is sort of just a gutsy type of a trade. I mean, it's one of those that you would definitely have to have a little bit of staying power. I would be looking to stop myself out underneath that 10 minutes. Or if you wanted to be a little more aggressive, you could put it beneath that opening A period bar, which is right after the U.S. Open, which is down there at 67. Once again, do I really want to risk $8 on some sort of scalp here? No, you don't want to do that. You don't want to do that. You want to cut this off as soon as you know that the short-term pressure isn't there and that the price action isn't necessarily going to grind higher. Right now, I mean, we're getting hit. Where do I get out of this trade? This stuff's important, guys. If you just took that trade, where do I get out? Where do I know I'm wrong? I don't know that I'm wrong yet. I really don't. The market's just sort of basing around. You know that there's always going to be compression around your daily highs typically before you move higher. Why? You got to get rid of those asks. There's a lot of asks sitting right there at 25.75, and now you're coming back down a little bit. Where do we get out? We've got to get out. I would be hyper aggressive. I'd be out of this thing at about 71. And you'll notice that with the long-term numbers, like with the long-term daily numbers, something like that, you can get out. You can risk that same amount of money using those long-term anchor points and hit with a much higher percentage than trying to play a momentum play on a 5-minute chart. There's a reason why I stopped trading the 5-minute chart WTI crude quite a while ago, and one of them was stuff like this. It's just noise. Do we think we're going higher today in gold? Yeah, I would be really surprised if we didn't. Doesn't mean that we are, though. And right there, you're seeing the sellers dig in at 25.75. So we're going to let that simmer. We'll come back and revisit it. We just want to get some trades going here. Euro USD, okay, here we go. Your crossover's pending. All right, there's going to be your crossover of your 5 EMA up over your 8. And you've got your 13. We're looking for a positive bullish close up over 13 in about the next minute and a half, and then we'll be looking to get long. That would be theoretically the end of your bear run. Definitely going against the trend here. So remember, if we do in fact execute this trade, your stop loss is going to be beneath that swing low somewhere in there, and then you're going to have an opportunity maybe to get long. But right now, the market's just sort of futzing around. And it doesn't really have a direction, I wouldn't say, other than the macro trend that developed during the overnight, which is definitely bearish. Ray Steele, good to see you. I'm tuned in. What's up? Well, not much. We're sort of watching that gold trade get pounded a little bit. We're going to go ahead and pull the trigger on getting out of that here in a minute. But that's sort of how you do scalping. I mean, you got to get in and get out, and you got to take a lot of trades. So we're watching this one closely. Maybe we get it, maybe we don't. And then right here, this is in an absolute free fall. We're definitely in oversold territory. You want to buy above that 9 EMA if you do get a chance right here on the NQ. Now, if we were hyper aggressive with the NQ and said, okay, what do I want to do right now? We could go down to a 1-minute chart. And you can see sort of exactly what I'm going to point out. And it's always post facto because, well, we're doing a bunch of other things. But, right there's your short, 38%. There's your short with the trend. So right as of this moment, this is a pretty steep trend. You'll notice your 1 minute chart here on the NASDAQ. NQ futures is sort of in oversold territory. We're definitely looking for maybe a buy up above that 9 EMA, and that's on a 1 minute. So we'll dial it down to a 1 minute, see if we can get a play here. All right, a couple other things that we need to go over here today. We got to talk a little bit of retail sales, and then we'll get back to our gold market. And also I want to talk about Bitcoin. Bitcoin's really, I think we've got just a fantastic area for Bitcoin that is really, really pretty good support. If you want to trade any of this stuff, gold, NASDAQ, WTI, whatever you want to do, be sure to check out a trading account at Switch Markets. If you don't already have a broker, Switch may be just the ticket, just the way to go. In any case, week 46, 2024, Veterans Day was Monday, Tuesday was quiet, Wednesday was CPI. That was the big market mover. But yesterday was also important, and it was important because Jay Powell decided to speak. He graced us with his presence and decided to speak. I don't know where Fed policy goes from here. We wrote up a piece on silver yesterday. I talked a little bit about silver, and I don't know, guys. I don't know. This feels to me like things are changing, and it's all about Fed policy because nobody knows what's going to happen. Friday's retail sales, and that's what we're going to cover today. So our fundamental of the day is retail sales. It's all about consumption. Remember, consumption is a leading indicator of economic growth and prowess. So if, in fact, you are looking at maybe trying to predict whether we're going into a recession or not, you're going to look at leading indicators. Something like a retail sales shows you how much money people are spending. Typically, that's a good indication of their confidence, exactly where they feel good about exactly where they're going to be in the near future. Typically, that leads to spending. In any case, retail sales, what are they? Well, they measure the change in the total value of the sales at the retail level. It is the foremost indicator of spending, which accounts for the majority of overall economic activity. A higher than expected reading is bullish for the USD, and a lower than expected reading is bearish. So let's go ahead and see what the readings were. Core retail sales. Just remember, core anything is just like your basic number with some of it stripped out. That's just think of it that way. I mean, like CPI, we usually take out fuel. We usually take out fuel and energy, energy and food. They're actually both fuel. But that's a big part of what they like to say is a sort of a more streamlined number. We take out the highly volatile categories of something like a retail sales, and then we come in with maybe more of a baseline figure. A lot of economists love that. Personally, I don't think it means much of anything to me. I just go right to the horse's mouth, and that's retail sales, 0.4%. That's above 0.3 expected, but still down from 0.8. So when we start thinking about, and I've already read them, and I'm not going to bring the stories up. I've been all over the media all week long, really since the election. But I saw a lot of media folks going, oh, this is a great retail sales number. This is a great retail sales. Strong economy. You just heard it from Powell yourself. Strong economy. The economy is really strong right now. Well, is it? Look at 0.4%, 0.3 expected. You still halved last month's gains. You're down big. You're down big from September's levels. Let's go ahead and take a look at the numbers here. You can see right there. Does this look strong to you? That's a pretty strong figure, but then you come back with a negative, and then you got a positive, and now we halved it. The next one's probably going to come in is going to be negative for November. So when we look at our retail sales figures, we go, is this sort of good, solid consumption? Does this suggest that we're going into a growth cycle, not exactly a contraction cycle? I don't think you can tell. I would crumple this number up and throw it away. This is a throwaway number. It's not really going to lead us to much of anything with regards to judgment calls on policy, and it's not going to help you trade the NASDAQ today. But what this does is this gets headlines, and a lot of people are saying, well, if retail sales are strong, what are the odds of our rate cuts coming? And we're going to talk about that in just a second. And then here's really your 5-year look since COVID. You'll notice the COVID craziness, absolutely insane economic numbers. A lot of reasons why these numbers all have huge peaks and valleys. Typically, when you figure out something like a retail sales, it's always comparative. So when you see, growth and contraction, it's comparative to what was the growth and contraction numbers. That's why the COVID numbers are always look completely fouled up. I put no stock in those peaks and valleys. They don't mean anything. This one right here, turbulence. There's a big spike right here as well. So what have we been doing really since 2023? It's been static. There was a bit of contraction back there early in the year. But right now we're in positive territory, and I wouldn't really put too much stock in retail sales other than understand what the media says, be able to talk. That's the whole reason why we cover something like this, is because I want everybody to think. I want you to start thinking like a trader and go, well, is it good or is it bad? Does it matter? Not really. What matters is will it drive the markets? I don't think a number like that today drives the markets, but I do want to see, I had this up earlier. I was looking at it earlier, our interest rate expectations, of course. Yeah, and this is exactly, guys, this is exactly what I was talking about earlier, and really is going to show you why the U.S. dollar is doing what it's doing. Bitcoin, though. Let's talk Bitcoin first. This was sort of a trade idea that we put out. I believe I put it out on X a while ago, or I don't believe this one made the trading room, but I did put it out on X. Nice big rally right there. Nice compression right around that 87.5 level. That's been absolutely huge support for Bitcoin. Absolutely huge. So if you're trading Bitcoin and you're interested in maybe getting into a long side trade, then you're looking right there at 87.5. I think that would be my entry. You can see right there, that's sort of the order block that's really worked as downside support. And now you're just looking to grab a bounce off of that level. Now, if you're serious about maybe buying more Bitcoin and you want to get involved on a meaningful level as opposed to just scalping, this is all the chart you need. And there it is. What is that? It's a flag. It's a bullish flag. You'll notice right here. Here's your trend line. Boom, boom. And then something like this. Bull flag. Now, do we want to buy at the top of the bull flag on a breakout? Yeah, I wouldn't have any problem with that. Or do you want to buy a pullback? I'm more than happy to buy pullbacks. So something like this right here, your low, that's sort of your spike low right there, which is 75,648. And this is 75,665. So right there would sort of be the basis of what I would be doing with my Fibonacci's. Nice compression area. There was your bull flag, and then we broke, and now you're getting compression up at the top. And something like this is going to be really an interesting type of a trade, and you're almost there. 86,640. That's a pretty good long right there if you're trading Bitcoin. You'll notice yesterday we hit that thing perfect. Absolutely beautiful trade right there. Went up. Could you do the same thing again? Yes. Now be careful if you're going to play the long side of this. Don't mess around. Like our gold trade's long gone that we just placed a little bit ago trying to buy the top of the market. That's why you don't do things like that. But this right here, understand that the key levels are very important. Understand that there's a lot of longs dug in, and their stop loss is going to be right beneath yesterday's low. Yesterday's low is 86,685, so right now we're at 88,140. So there's some room to go here. This is an inside day. I love the inside candle formation. That's a nice big rally, nice big two-way action, but that signals compression. That means the market's tightening up, and it's getting ready to make a move. Now, it may be bullish, it may be bearish, but it looks to me like you've got two inside days working. If, in fact, we do sell off beneath that, that's really going to signal to me that there's some bearish sentiment in the market, and you're going to see potentially a big-time correction. In that case, if you want to scalp, you scalp right there from 86,640 to the long. Those are buys. Be very tight with it, though. Don't get knocked out. If you see the market break beneath yesterday's low and really run, you've got to get out. Get out quick. Don't dawdle. Right here, 62%, 82.4. I'd be looking at 82.5-ish. That's a great trade, and that may be a trade idea that we put out a little bit later on today. But that one right there, that's going to be a pretty good area. That would be the back end of my golden zone. That's sort of a premium buy right there if you are interested in playing Bitcoin. So I know some of you buy Bitcoin on the cash markets. If you bought up here, I would be a little bit hesitant just in case we do get those two inside candles and then a break. But if in fact, you get an opportunity to bid this thing from down in here, you got to love it. You got to love that. 82.5, that's not bad market entry at all. All right, let's take a look at a couple of our other scalps, then I'll go over WTI crude. Still very much, and this is a 1-minute chart. We're still looking. You're in oversold territory here. If, in fact, we did get a bullish close above our 9 EMA. Now, remember, this is just our 9 EMA with RSI confirmation, relative strength index. We're looking for that thing to get beneath 30 to be in oversold territory. That means we're going to buy the market, right? Or that we want to buy the market. In our trigger, it's your trigger. Right there is going to be your 9 EMA. So just a real basic way to trade this thing. If we get a bullish close, a candle that closes above that 9 EMA, and we're in oversold territory, then we buy it. It's that simple. So 4, 3, 2, 1. You're going to probably have to sit here for another minute. And if, in fact, we do get this bar to close up above that 9 EMA, then we'll be in it for a long trade. Let's go ahead and pull our DOM up. Let's get back to gold. Gold market's absolutely falling apart. We bought right here, assuming that we were going to go higher because of the correlations. Remember, Wall Street was trading negative, all right? We were negative. VIX was up. That's all over with now. Market's absolutely crashed, and the reason why it is because the dollar index looks to me like it's moving higher. Remember, your stop loss really needed to be maybe right up here, maybe right there, but you got to just scratch that. That's the kind of trade, as a young trader, I made over and over and over again. Over again. I'd say, okay, well, we're going to break out above those overnight highs. Typically, it doesn't work, especially when you're in a compressed situation like this. That's a tight daily range. What do you want to do? I want to sell it if I get a chance. Doubt I will. My longer term levels, we sell from right up there. We already covered that long-term level right here. There's a big difference between a monthly level and a 5-minute chart. Big difference. There it is, 24.85. That's the bid. All right, let's have a look. All right, we're getting there. 34 seconds left. If we get this thing to break, we're still in buying territory. Let's go ahead and get our market buys ready here on the NASDAQ. As far as our take profit, we're going to sort of manage that one on the fly. But what I do want to know before our stop loss, before we get in here, is where's our stop loss going to be? It's going to be right there. So we're going to send four contracts in NASDAQ high. That's legitimate leverage if you're trading with 4 contracts. Then you probably have a little bit of money, I would say, in your account. If not, you could be trading a challenge account, and a trade like this is totally doable. They give you that kind of leverage. All right, there's our trade right there. There was your 1-minute bar closed above the 9 EMA right there. We were in oversold territory. That was our buy signal. But once again, I'm not waiting around. If we do get taken out on this swing low, I'm gone. And right here, looks like we're going to get nailed. That's the bottom line. Listen, every hand's a winner and every hand's a loser. What you have to do is have your risk versus reward really nailed. Right here, we know where our stop loss, where we're going to get out at. Where would my profit target be? Well, if I'm in there at 20,606 and my profit target's down there at 20,581, something like that, I'm going to need to at least get 15 points on that play. So we're going to be looking, 25 points. So we're going to be looking something like this. 31. That's a basic 1-to-1 risk versus reward. Now, the biggest problem that you have with taking a trade like this on a 1-minute chart, using something like a 9 EMA on a 1-minute chart and an RSI, is you're fighting a trend. You're fighting a trend, and if you call the bottom of the trend, God bless you, you're going to make a lot of money because you essentially would have called maybe the bottom of the session. But if you ignore the macro trends and try to trade 1-minute chart like this, it can be a real challenge. So just the way that we tried to play a breakout here on this 5-minute chart, on this 5-minute gold chart, by ignoring the fact that we're in rotating market state, we lost. Now what's going on here? We're getting killed. Why are we getting killed? Because we're in a downtrend. Pull up your 30-minute chart. I mean, that right there, essentially what we've done is locked ourselves in on the intraday low at about, 10:30 in the morning, which isn't necessarily a bad trade, but we are definitely fighting a very, very steep downtrend. So in one respect, I would say if you hit this trade, you're in good shape, meaning you're going to make some money here. But gosh, the odds are against us. Why? Because the macro trend's really hurting us. Be that as it may, if we have a system dialed in that says RSI confirmation with our 9 EMA, then we just take the trade, we put our stop losses down, and we just let the thing rock and roll. Right here, I can almost guarantee we get stopped out because we're fighting a trend. But hey, if the bidders come in, then we'll make a bunch of money. This is set at a 1-to-1. To be brutally honest with you, if you wanted to make some real money trading this strategy, you almost have to pick a bottom and be shooting for market structure, meaning this compression right here, this leg that we saw about 30 minutes ago when we started, that's where you probably have to put your profit target, and that's just to make it worthwhile. Now, if you do something, if you can hit a trade like that, now that's what, a 51.25, about 50, 70, so that's about a 1-to-3, somewhere in there. That's a healthy trade. That's a big trade. Can you depend on doing that with a 1-minute chart? From my experience, the 1-minute chart's been a real problematic for me. So this is the type of trading where your risk versus reward is going to dictate everything, and you're going to take a lot of losses trying to get that one big win. For me, the trend is your friend. Make sure that you don't fight trends or you'll lose your money. That's just the way it is. And you're seeing it right here in action. Smaller the time frame goes, the less reliable any system is. I don't care what it is. The larger the time frames are going to give you a chance to succeed. If I was trading a strategy like this on U.S. equities, it would be, realistically, it would have to be a minimum 30-minute chart. I would be working a 30-minute during the U.S. session. That would be probably my strategy that would give me a good idea of what price action's actually doing. This right here, I won't call it slop trading or garbage trading, but you can see that we're definitely fighting. We're fighting the headwinds of just a mean downtrend, and I don't want any part of it. So right now, think about what's happening in your mind. It's about 8:30 my time, so 10:30 Eastern. Okay, we've got an we've got a serious downtrend on the 30. Serious downtrend on the 30. That's about as steep as it gets. No retracements. What do you think is going to happen here? They're probably going to run the low. They're probably going to trade beneath the previous 30 minutes before you get that big retracement, probably up in today's range. So even though you might be right trying to pick a bottom here, I mean, there's lots of ways to try to pick a bottom. I think this is a real tough one. But, if the thing starts going green and you get an opportunity to take a few bucks off the table, you certainly could do that. Something like this would probably be a better trade, going right up there from your retail sales bar, right off of the day's low. Something like that, you'd be looking to sell right up here where our profit target is. That's probably a much better trade, much higher probability. But this one right here, maybe it works, maybe it doesn't. We'll just have to wait and see how this pans out. To me, I don't think that's going to happen. Maybe. Could happen. Never know. Never know. All right, let's take a look at our Euro USD. There's our triple now right there. This one I have a little more faith in. You've got sort of that crossover of the 5 over the 8 and then the 13 up here. Now you've got to get a bullish close on the 5-minute. You got to get a bullish close on this Euro USD above the 13, and then it's guns up. You're just looking to take the trade. Crossover's in play. Now you just need a big bullish candle to confirm that you're in where you need to be in at. All right, let's take a look at WTI crude oil. We'll go ahead and call it a day. We had a real good trade on WTI yesterday. This is the kind of trade that I really like. As opposed to trading 1 minute 9 EMA crossovers and all that jazz, I like this kind of trading. This is the kind of trade that I could see coming for a day or two, and I'm ready. I'm just ready to get in. And you can see right there at 69.21. Yeah, that was pretty good. Your high up there is 35. I think we sold 14 somewhere in there because we wanted to get in on it. Worked very well for us. So we're still in a sort of a daily bearish formation. What I really would stress, though, if you are trading WTI, is don't forget the big number. Can you sell that again? Nah, you could if you wanted. To me, though, the big number is this. And the reason why I would pull that up is because we're in the vicinity. Remember, the WTI crude low is not 1 cent. It's not 0. It's negative 40. That was the low of crude oil after, and something like that, after the COVID panic. What's our key number there? I paint them with broad strokes. It's down around 64.50-ish. But take a look at where you're trading here as far as a monthly chart goes. There was a spike low that developed, let's see, a few years back already. Time flies when you're having fun. Low there, 63.61. All right. Interesting. That's going to be downside support, but really what we need to look at is this area right here back in March of 2023. Your low there, 64.41, 63.61, and there's your compression, and you have an opportunity there maybe to get a bid in. The reason why I would bring that up is because we're knocking on the door. We're only about $3 off. Don't be surprised if this zone down here, this bidding area, 64.50 to 64.75. Don't be surprised if that comes into play early next week, and we'll be there ready to go. Manish, good to see you, Manish. All right, everybody, that's about it. I would say that as far as scalping goes, this is a hard way to live life, 1 minute charts. But if that's how you want to trade, go get them. Just make sure that your losses are down. Take the loss. The first loss is your best loss. As far as gold goes, we're seeing a bit of some bearish action here. Don't forget this number as well. I know I'm stressing this stuff, but it's because these are high probability levels, high probability trade, and we've got a trade idea out on gold. I believe I put out a little bit earlier this week. As far as the NASDAQ, there goes your NQ. I mean, do we make any money here? I mean, really, what has to happen? There's plenty of room. If the bidders enter the market and really start hammering it, we've got a chance. I mean, we've got a chance, but we've got to see some bidders. And right now, sentiment is negative. We're really struggling to get any sort of positive ground. And, essentially, just real quick, this is the problem with the markets today. Absolutely, Mark Corp, you're welcome. Have a great weekend. Take a look, though. These are your interest rate expectations. Now, this was at 80% the other day. It is now just about 50-50 whether we get any rate cut at all. I don't think we're going to get it. I really don't think we're going to get that rate cut. And what has that done to the markets? Well, I mean, as far as your Dow, let's take a look at the Dow, which has been the big winner. Natural resistance, 45K. We've had that outlined for a while. 44,486, and now you're seeing a bit of compression here. We understand that this has been just an epic month, about up 5%. But that right there, those interest rate expectations are driving the VIX. Take a look at the VIX today. Today, give me a daily here. What happened? Powell spoke. He said, I'm not going to give you the rate cuts you think. Now you've got the big gap up in the risk index. That's strengthening the U.S. dollar. In turn, it's going to be a real drag on stocks. Guys, you can see this market crash coming from a mile away. I mean, you really can. Right now, they're setting the table for a major sell-off. And I just want everybody to be ready. I think it comes in early 2025. To be honest with you, guys like me have gone broke trying to pick tops of markets. This one looks obvious. It really does. So we'll see what happens. All right, Bobby Bob, wishing everyone a great weekend. All right, guys, thank you for joining me this week. It's been a lot of fun. We'll be back in the saddle next week with plenty more of everything. I'm still not really overly, and then right here, this is what you've got to do is when these trades go bad on you, you've got to get out. Right now, we're pushing intraday lows here in the NASDAQ. You've got to scratch that. If you don't scratch it now, you could absolutely lose the ranch. And once again, these are demo dollars. This isn't real leverage. How about our Euro USD? Do we get that one yet? Not quite yet. So I'm sort of watching this one for a bottom. The other one, I would be careful with U.S. equities. This is a dangerous situation. All right, everybody. I want to thank you for joining me. Have a fantastic weekend and a great break. If you have any questions, stop by howtotrade.com. Be sure to send me a private message and also check out our new video on YouTube, the Rally-Based Rally. We'll probably do something on that stuff a little bit next week. All right, everybody. Until next time, trade the action well, and we'll talk soon. See you.